Good morning. This is Werner Von Pine. I'm CEO of Better Choice, and thank you very much for giving me the opportunity to discuss our business. Better Choice has two entities. One is Halo, purely for pets, which is a pet food company, dog and cat, and covers all channels of trade, but focuses very, very much on e-commerce. TruDog is a direct-to-consumer business. So therefore, Halo and TruDog complement one another extremely well. We have premium natural products perfectly aligned with consumer trends, and they are premium brands that have exhibited growth consistently, and they are in line with the attractive consumer dynamics and changing consumer behavior. We have a strong focus on e-commerce and the international channels, which are growing dramatically. And as a result, we have enjoyed consistent short-term and long-term growth. The pet food industry is phenomenal. It continues to grow annually. Worldwide, it's about 100 billion, and approximately half of that is in the US. We have enjoyed growth of about 20% annually, and the category itself continues to grow at about 3 to 5%. It's an essential category, and therefore we're very fortunate to be in that. The favorable thing is that the underlying trends continue to grow. The e-commerce channel grows because consumer trends are now more towards e-commerce and direct-to-consumer, so we're very fortunate to be in that. And in a prior recession, there was proof, and consistently so, that the pet food category was not hurt by prior downturns in the economy. The categories that we participate in are dog and cat, and dry, canned, and treats. So we're in all of the segments. The growth continues to be, as I said, I'm going to say about 5%. We're growing about 20% in large measure because of the consumer behavior being such that they move more towards the channels of trade where they don't have to go to brick and mortar. International is growing. Asia is 20% of the global market, and we are certainly in line with that. If we look at some of the numbers, Better Choice, and looking at, for instance, fresh pet, we are not nearly at the multiples and should be. Fresh pet is like 12 times and 75 times EBITDA. We're at about 1.4, 1.5, and there's lots of opportunity. We also happen to have a substantial new products team. We continue to participate in that. We enjoy growth because we are just opening up new channels in food, drug, mass, which is still in the US, roughly 50% of the category. And international, as I say, is key. Not only Asia, where we are substantial, but we're also now participating in Europe and selectively in South America. The portfolio that we have is also substantial. We have obviously treats, we have the canned food, we have the dry food, we have several types of offerings on TruPet. The key customers, bricks and mortar, are Wegmans, Walmart's, Stop and Shop, PetSmart, and in terms of e-commerce, obviously Amazon and Chewy. Pet Specialties, Petco, and PetSmart. So we cover all the areas, and we're noticing that the direct-to-consumer as a category continues to grow, and we're very fortunate to be in that. Our products have a low moisture content, and therefore people who are frequently very, very concerned, obviously very concerned about their animals, they read the packaging. They want to know what's in it. So our followers are very, they're in terms of relation, most of them are married. fairly high education, professional, and they are consumers that are very, very concerned about their pets. One of the key things why pet food is growing, and particularly in our area, it's the humanization, the humanization. I cannot say that enough. People tend to feed and care for the pets as if they are a family member, and indeed they are a family member. In the case of product differentiated product offerings, if Halo is compared to like Blue Buffalo and Merrick and all the others, we are whole meat, not rendered meat, and that is obviously a key. Our manufacturing relationships go back a number of years. In the case of Halo, we have several different ones. In the case of TruPet, we do as well. And the relationships are substantial. And the interesting thing is, one would think in the crisis that we currently find ourselves in, that there would be issues with supply. We haven't had that, and it's really because of our formulations, and that's we're very, very fortunate in that regard. We've positioned our spectrum for a product for long-term growth, and this is what we drive for. We've certainly do this with new product initiatives. We cover, as I mentioned, all the channels of trade and are focused on those that are growing the most. I guess if we look at it strategically, our strategy is really to follow consumer behavior, because it's the consumer, obviously, who makes the decision as to what is bought and where it's bought. In terms of the TruPet overview, let me be specific. That TruPet has a strong and loyal, growing, recurring customer base. The company was founded in 2013. And so has been around for about 7 years. It's well positioned as the industry shifts, as I mentioned. And again, wellness products, dehydrated dog food, oral care, wellness products, etc. The interesting thing is, two businesses have come together under the Better Choice umbrella. They're not competitive. They really, the channels of trade are different, which is wonderful, because that enables us to grow. It's the kind of thing where 1 + 1 is 2.5. In terms of a historical pro forma financial position, I don't want to really get into historical financials. The important thing is that the company is sound, cash positive, and growing substantially, as I mentioned. If we look out at the 2020, where we are now, halfway through, we'll do very well. And 2021, we will realize all the growth that we have put in place during the current year. The management team is very, very experienced. Most of them have considerable pet food experience. In my case, I have run 5 pet food companies at this point. My background is very much consumer products. Started with Procter & Gamble, and then ran the Quaker Oats international business, which was all pet food. Worked and ran 2 major coffee companies. One is Lavazza, the largest Italian coffee company, and then another one, Melita, largest German coffee company. Prior to my association with Better Choice, I ran a company. Obviously, Halo was bought by Better Choice. So I was CEO of Halo. Prior to that, I was CEO of TruDog Bakery, which is a dog food, not cat food, dog food company, and was involved in the sale of Alpo prior to that. Damien Della Longa, who is Executive VP of Corporate Development, is a very, very experienced Corporate Development Director and Executive. Robert Sauerman is Exec VP of Strategy and Finance and has a considerable background in that area. The Board of Directors is similarly extremely experienced. There are 6 board members. come from different areas and have been very, very supportive in the growth of the business and continue to participate actively in the business. We have very substantial meetings, and we just had one I'm going to say a week ago, and really set the stage for the strategic direction and growth of the business, and we're all aligned. And I am absolutely delighted to be part of this team and be involved with a team that is really, really charged up to grow this business and know what they're doing. I want to thank you very kindly for your time and allowing me to spend some time discussing the business. And I look forward to any questions that you may have. Thank you very much.
Okay, we're now opening the line for our Q&A session. For our audience, if you do have any questions, you can just click the question button that's underneath the presentation window, and you can type your questions in. You can do that at any time, and we'll get to the questions as they come in. But with that, we'll just jump right into things here. Our first question was actually about the recent announcement about China and the registrations. And can you talk a little bit about the timetable for rolling out, following that up as far as how quickly you're going to be entering the market over there?
Yes, we've actually started. We got this agreement from the Chinese government about a month ago. We've been working on that for 2 years. We're the only people that have gotten it. And what that means, we can sell on mainland China. The interesting thing about China is the pet ownership there is 8% of households. In the U.S., it's 65%. And the Chinese market is growing about 30% per year. So we started. We're getting the orders now. And it's a wonderful opportunity. We're absolutely just delighted to have that. We have 15 items for dry and canned, and so we're on our way, and this is part of our strategy.
Very good. Thank you, Warner. And the next question, this investor would like to know, regarding the valuation gap between Better Choice and competitors like Freshpet, with Better Choice around 1 times revenue, Freshpet at more than 13 times revenue. Is there a plan to somehow close that gap and create more investor awareness to bring the valuation closer to the peers?
You want to handle that one, Damien?
Yeah, sure. Would be happy to. And thanks to everybody for joining the webinar today. The Freshpet comparison is one that we have discussed consistently on our earnings calls and investor outreach, and we think is a very strong blueprint for what we are going to accomplish and have accomplished at Better Choice. I would note a couple of things about the comment around closing the valuation gap. The first important strategy is our uplist process. Freshpet is a large liquid company that's been publicly traded on the major exchange for a number of years since its IPO. We are in the process, as investors will see, an S1 was filed on Monday, so we're in the process of increasing investor awareness through an uplist onto either the New York Stock Exchange or the NASDAQ, and we expect that to be a mid-2021 event. So that's strategy number one. Strategy number two, what I would speak to is just the revenue trajectory of Freshpet and then where we sit at Better Choice. When Freshpet IPO'd in 2014, they were doing about $70 million of revenue, and the business IPO'd at about 4 times revenue. The company's doing now about $250 million of revenue and is trading, as you mentioned, at about 13 times. BTTR, the goal here is really to get this company to 100 plus million of top line, which we think is an important threshold for us to garner a premium valuation multiple. So that's really strategy number two. And the third prong really is are things like this webinar, our investor outreach. We're a new business. We've been very active on the acquisition front, and a lot of investors are new to the story. So getting that story out and explaining how we really are very, very similar to Freshbet in terms of the products we're selling. They're different products and they're slightly different distribution channels, but the theme of premium food and treats for cats and dogs is really the same between both businesses. So I'd say that those three avenues are will ultimately help us close this valuation gap.
Very good. Thank you, Damien. And our next question, are there any acquisitions in the pipeline, and what type of criteria you're looking at for any future acquisitions?
Yeah, no, great question. We obviously want to be, we'll only be disclosing publicly available information on this call, so I won't speak about specific targets that we are in process evaluating. But to answer the question, we are actively looking at three potential targets now. Those tend to be similar to our existing revenue streams, so cat and dog, food, treats, and supplements, both domestic and internationally. We have evaluated north of 10 opportunities in less than 12 months, and we expect the acquisition pipeline to continue to increase. I think that's even more pronounced in light of the developments and recent volatility in the financial and capital markets. So we see a tremendous opportunity to roll up this space. One of the reasons this is a public company is because we want to be able to use our stock as a currency to affect these transactions. And to answer the second part of that question, just to highlight a couple of the basic parameters that we use to evaluate transactions. From a valuation metric standpoint, we typically look for a trailing 12-month revenue multiple of less than 2.0 times. We like businesses that are cash flow break even or cash flow positive, excluding obviously any strategic initiatives that we would fund with growth capital. We are big fans of having businesses that we are looking at acquiring the equity owners of BTTR. So in terms of structure, we like a combination of both cash and stock. We think it's important to have everybody aligned and an owner of this business so that we're working towards the same goal of getting this company to 100-200 million of revenue. And obviously we don't really have a preference for domestic revenue versus international revenue. I think that's all kind of evaluated on a case-by-case basis. But hopefully that provides investors with a couple of the parameters that we focus on when screening opportunities.
Yes, very, very good, Damien. Thank you. And our next question, do you have any growth projections that you can talk about over the next 12 to 18 months? And what do your financing look like to execute on any of that growth projections?
I'll handle the growth part, and then Damien can handle the financial. We're growing at about 20% per annum right now, and the reason for that is we are very much into e-commerce, and as we talked about Asia before. So we're very fortunate from a strategic standpoint that we are focused on those areas where the consumers, the business is growing most. And e-commerce direct-to-consumer, for instance, is about 75% of our business, or say 70% of the business. And as mentioned before, Asia is growing dramatically. So with the growth in Asia of 30%, overall growth of 20%, so that's basically short-term. Long-term, it'll probably be even greater than that. You want to get more specific, Damien?
Sure. I can speak a little bit to our organic internal forecast. We're looking at 2021 top line of kind of mid $70 million range, and again, that doesn't include any M&A. I mean, we really do believe that we could have this company north of 100 million of revenue within 24 months, and we think that $100 million threshold, like I mentioned before, is an important level of top line revenue, where the big players like Purina and Nestle and Smuckers, General Mills, etc., would have interest in looking at a strategic transaction with Better Choice. To comment on the growth initiatives and capital market requirements to hit those growth initiatives. We have the business right now cash flow positive, cash flow break even. So we do not need to access the capital markets for any operating requirements. So the organic number I cited of, call it 75 million, 2021, is exactly that. It's all organic. If there isn't, we can fund that growth with internally generated cash flow. To the extent that there is a cash component to any M&A transaction, we would obviously look to potentially raise funds there, but that's case by case, and we'll evaluate that as these opportunities on the M&A side become actionable in the future.
Another aspect, if I may just add, of growth opportunity. We talk about Asia, specifically China, and e-commerce. Food, drug, mass in the U.S. is about 35 billion sales. We really have not tapped into that to the extent that we would like and that we're planning. So we have all types of initiatives with regard to the food, drug, mass channels in the U.S. And most of the grocery chains and drug chains that we see every day, we're just really initiating with those. Only right now, it's basically 5% of our business, and it's a huge, huge opportunity, and we have lots of it going on right now. It'll come to fruition in 2021 because it takes a little while from the time we make the sales call. So that's another great opportunity we haven't touched on.
Very good. Thank you, Warner. Thank you, Damien. And the next question is, actually, a couple questions about this. Have you had any impact to the business from either the manufacturing side, or also have you seen any type of uptick in possibly e-commerce sales during this period over the past several months?
Well, interestingly, yes, the e-commerce sales went up dramatically a couple months ago. They're now returning to normal. But very, very importantly, we have not experienced any supply issues, in large measure because we have relationships going back 10 plus years with our manufacturing operations, and as such, we're very fortunate because we have not been affected by the pandemic other than a change in consumer purchase patterns, moving somewhat more from the brick and mortar to the e-commerce. But we have not seen anything, and we project out 90 days on our purchase orders. Haven't seen any change, and really because of our unique nature of the product, we don't expect that that's going to happen.
Very good. Thank you, Warner. It looks like that was the last question from the audience. I guess just in summary, what's the key takeaway? I mean, I think you've already answered this pretty well in the presentation and here in the Q&A, but what's the key takeaway? Why should investors take interest in Better Choice today? It's
a unique company in terms of the growth. We're experiencing, as I mentioned before, 20% plus growth. We're strategically positioned exactly where the growth is domestically and internationally. And as such, we definitely anticipate a $100+ million business within an 18 to 24-month period, if not more than that, because we are in those areas of the business where consumers are gravitating towards. There's a change in consumer pattern, and everything is about the premiumization and the humanization of pets, and that's where we are engaged. David, do you want to add anything?
I don't think so, Warner.
Okay.
I think that was a pretty good summary.
Very good. Well, thank you, everybody. We really appreciate it. Really appreciate it.
Very good. Well, we appreciate having you here. And for our audience, again, this was Warner Von Payne, CEO of Better Choice, as well as Damien Delalonga, Executive VP. If you have any additional questions after the webinar, please don't hesitate to reach out to us at Redshift. You can call us at 1-800-REDSHIFT or email us at info@redshift.com. And, of course, you can also go to BTTRinfo.com. That's ticker symbol BTTRinfo.com. And you can sign up for news alerts. So as the company accomplishes some of these milestones moving forward and the news goes out, you'll be one of the first to get those. Those are free news alerts there. We also have additional information about Better Choice available there as well. But again, if you have any further questions, please don't hesitate to reach out to us, 1-800-REDSHIFT or info@redshift.com. Thanks again, everyone, for joining us.